Hi there, welcome to Kneppy Invest. In today's video, I am going to touch upon a company that potentially I was unfairly dismissive of, and that company is N1 Holdings. They are a non-bank lender. Now, when I looked at this company about 1 year ago, 18 months ago, I saw a company that was not growing, whose shares were very liquidly traded, and I just thought this company is not for me. Then I've just taken another look at the company recently, and I went, ooh, things might be turning around for N1 Holdings. There are some exciting things happening with this company, and that's the reason why I've decided to do a video on this company. I'd probably suggest and think that the majority of people watching this video and the majority, vast majority of investors who do invest in the ASX have never heard of N1 Holdings. And that's not a bad thing, because sometimes you want to buy into those companies that are, people have never heard of, because possibly eventually, maybe 5-10 years down the road, N1 Holdings will become more well known. And that's when you will see significant growth in the valuation of the company. Not saying that will happen for N1 Holdings, but that is a potential future of this company, just one of many potential futures. Now, I've already mentioned that N1 Holdings is a non-bank lender. They have 4 business units, and by far the biggest business unit is property-backed direct lending to SME owners, so that's small, medium enterprise owners. They also have a mortgage management and broking division, asset management, and others, which is a lot of the stuff, but I won't get into that right now. Now, later in the video, I will break down their revenue by the different segments, and you'll be able to see where they derive most of the revenue from, which is the property-backed direct lending. But this particular slide, taken from a presentation the company released about 1 year ago, might be a little bit out of date, but it just shows you where this company's focus is. So on their webpage, they do say that they provide strategic financing advice to SMEs, project developers, and sophisticated property investors seeking new capital or debt or refinancing existing debt. We assist borrowers through the complex processes of attaining debt capital from Australian major banks, private funds, and offshore debt capital providers. N1 Holdings was founded in 2011 by a chap called Ren Wong. He's also the CEO founder. And N1 Holdings was listed on the ASX in March 2016. And to be honest with you, from March 2016 to maybe 1 year ago, this company was doing nothing. You'll be able to see that when we look at the chart. Now, the CEO and founder, Ren Wong, also has 58% shareholdings in this company. Now, you could argue with me, that's probably a little bit too much. I do like skin the game, but 58% might be a little bit too much. But the fortunes of this company moving forward are highly important to Ren Wong, just like they are to shareholders. That's why a lot of investors out there like skin the game, and definitely there is a skin the game with this company. It could also be the reason why the shares in this company are illiquidly traded. Right now, the share price is at 24 cents, tripled from when I first started looking at, which means the market cap of this company is at $21 million, and the T code for N1 Holdings is naturally enough N1H. So let's have a look at their Appendix 4Cs. But before we have a look at the most recent one, we'll just go back 1 year ago, because I just want to see how this company progressed or has progressed over the past year, because potentially this is the most exciting year this company has experienced, about 10 years after they were founded. So 1 year ago, they had $777,000 of receipts, but also received $1.2 million from net cash from commercial lending. Not exactly sure what that is, but receipts of customers and net cash from commercial lending meant the company was operational cash flow positive in this particular quarter by $721,000. And if you compare it to the first 2 quarters of that financial year, it was a turnaround. So potential turnaround story or potential turnaround period or point in time for N1 Holdings was about 1 year ago, because they had become operational cash flow positive. And they were able to grow the cash on hand from 1.9 million to 2.5 million. Now let's see how this company has performed over the past year. And cash receipts has absolutely taken off. It's increased 3.1 million. Now, this will become even more impressive when we look at the cash receipts history. So that's what has really piqued my interest in this company, is just that significant increase in cash receipts over the past year compared to what we have seen from this company over the past 5 or 6 years since they listed on the ASX. Interest, because they do have to borrow money to lend, I think they said they have something like $60 million of borrowings, and interest paid on those borrowings are up 1.1 million to 1.3 million. Now, staff and administration costs have only increased $300,000. So that's good. We haven't seen a massive explosion in their expenditure, staff administration costs. So that meant the company was operational cash flow positive by $1.6 million in this particular quarter. The other interesting thing here is net cash from commercial lending was only $531,000 in this particular quarter. But the first 2 quarters, that was $7 million. So that is one major question mark I do have about this company, is what is exactly this net cash from commercial lending? I would like some clarification around that, and hopefully I'll get that as I expand my research in N1 Holdings. And the net cash this company has ballooned or grown to $12.5 million, which means if you take away their lending and take away those loans they have given to other companies, that means the enterprise value is actually quite a bit lower than $21 million. One of the things I like to do when a company has quite a few divisions is just to see where the revenue is derived from, which is their biggest division. And for N1 Holdings, it's by far their commercial lending. They derived 3.6 million of their 4.6 million revenue from commercial lending interest. And the second biggest division is their mortgage brokering origination commission, 602,000. And if we look at the growth in both those divisions, it has grown significantly over the past year. For commercial lending interest, it's grown from 1.8 million to 3.6 million. So actually more than doubled. And mortgage brokering origination commissions has grown from 210,000 to 602,000. So almost tripled in revenue over the past year. And all their revenue is derived in Australia. So even though they talk about Singapore, Hong Kong, China in some of the presentations and on their website, all their revenue is right now being derived in Australia. Now onto the receipts history. And last time I looked at N1 Holdings about a year ago, so about April 2021, the receipts in that particular quarter was 780,000. And if you look at the history of receipts over the past 5-6 years, receipts were just going sideways. So that's one of the reasons I was not excited about this company. Receipts were not growing, but something's changed in the past year because receipts have grown from 780,000 to 3.9 million. So we're on the upward trajectory. So that's another reason I want to do a little bit more research on this company. Why have receipts started to take off? Are they doing something different? And whatever they're doing seems to be working. Now onto the chart for N1 Holdings. And this is the chart going back from when they listed on the ASX. So 6 years of candlesticks right here. Usually, if I'm showing you a 6-year period, I have to show you a weekly chart because most companies are traded every single day. That's not true for N1 Holdings. Now, there was a period of time between 2017 and 2021 when this company was hardly traded at all. And if you're a shareholder of this company and you suddenly needed to sell your shares, you could have been waiting, excuse me, you could have been waiting for a long period of time before your shares were sold, or you had to sell them at a high discount. So what's been happening over the past 15, 16 months is the market is becoming a little bit more aware of this company. So we're starting to see that liquidity problem improve. Hasn't completely improved because there are still some days when shares in this company are not traded at all. But the share price has started to increase as the liquidity has started to turn around. In fact, the share price has increased from 5 cents from June last year to current share price of 24 cents. So a nice little firebagger for shareholders during that period. Now, one side effect of the trading of a company going from highly liquid to just illiquid is you do see wild intraday swings in the share price. You might see a shares increase or share price increase 10, 20% in one day, and then the next day drop 20 or 30%. We actually have seen that with N1 Holdings over the past, we'll say 4 or 5 months. But this is a sign that the market is becoming aware of this company. And one future path that we could see N1 Holdings go is this liquidity problem is overcome and the shares of this company are traded on a daily basis. I have seen that happen in the past with some companies where they are illiquidly traded and then they become liquidly traded because the market becomes aware of the company. It will happen or will take time for it to happen, but we are possibly seeing that with this company right now. That's all I have for this video on N1 Holdings. They're looking at their March quarter results for financial year 22. A fairly interesting company. I still have to do a little bit more research on a few aspects of the company itself. So if you do have any questions about N1 Holdings, if you know more about this company, I'd love to hear your opinion. So just leave it in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.